Hi buddy, in this video I'm going to share with you what Chamath had to say regarding the recent GameStop saga and why he thinks that retail investors just like you and I are going to change the stock market history. And without further ado, let's go to the video.
So you tweeted yesterday that you bought $115 calls in GameStop. Can you tell me what your position is as of this very moment?
Yeah, can I tell you a little story before all of that, or no?
Why don't you tell me that first, and then we'll go from there.
So this morning I woke up after spending all last night in WallStreetBets, reading about all of this stuff. I ended up closing up my position this morning, but I really want to tell you, beyond the 500 grand donation or the money that I invested, which was, not a huge amount in the grand scheme of that stock or the entire market, what I learned, because I think what I learned over the last couple of days is important for everybody that's watching CNBC. You have a lot of people, and I would encourage anybody who is dismissive of this thing to go into WallStreetBets and actually just read the forums. And I think that you're going to see three kinds of posts. The first kind of content are a lot of people doing some incredible fundamental diligence on companies, trying to think about long-term value. And in my opinion, many of them are doing as good and, frankly, a better job than a lot of hedge fund analysts that I work with. That's number one. The second are a lot of people who believe that, coming out of 2008, what happened was Wall Street took an enormous amount of risk, and they left retail as the bag holder. And a lot of these kids were in grade school and high school when that happened. They lost their homes. Their parents lost their jobs. And they've always wondered, why did those folks get bailed out for taking enormous amounts of risk and nobody helped and showed up to help my family? And then the third thing is a realization that instead of having idea dinners or, quiet whispered conversations amongst hedge funds in the Hamptons, these kids have the courage to do it transparently in a forum. And I'm not saying all of it is perfect by any means.
Let me just go through a couple of things you said here. I have a hard time believing. You suggested that there's, a good amount of fundamental research going on underneath the GameStop Reddit situation. Do you truly believe that there's actual fundamental research? Not to disparage in any way the people who are actually making these trades, but this seems to be momentum rather than a deep fundamental analysis.
Scott, there's momentum in traditional hedge funds and how they move stocks as well. But it's really disparaging if the starting position is these guys can't do the same quality of research as an analyst in a fund. That's just not true.
I didn't say that. I didn't say they can't do that kind of research. I'm questioning whether they're actually doing the research when it comes to things like GameStop and AMC and some of these other things. There's
a distribution. And obviously at one end, there are fundamental analysts. But on the other end, there are momentum traders that follow trends. But by the way, the dirty little secret of Wall Street is that exists in hedge fund land. The reason why this GameStop trade has caused so much pain is because at the top of the pecking order was Melvin Capital. Those guys were incredible stock pickers. They are incredible fundamental modelers of companies. Okay, Gabe Plotkin is one of the sort of giants of our era, of my era, right? But at the end of the day, what happens is, irrespective of what he puts on, his trades are mimicked and copied by umpteen other hedge funds that follow along.
I don't think you think, and you tell me, do you think that GameStop is worth $350 a share?
What I can tell you is that when I put that position on, $125,000 position, I used it to acquire knowledge and learning. And what I was trying to figure out is how these positions move in the modern trading era. And what I can tell you is, up until that point, the setup made no mathematical sense. How do you be short 140% of a company's shares? That wasn't retail.
Well, maybe that's a question for regulators, that maybe the way that's allowed to happen needs to be examined. But
I'll tell you how it's allowed to happen. It's allowed to happen so that hedge funds can charge 2 and 20 to their limited partners, independent of consequences. I'll tell you another way that it's allowed to happen. Hedge funds are allowed to take their money, go to a prime broker, and all of a sudden get 10x multiplication on that money. That's the problem. You have trillions of dollars of notional being traded by these organizations. You have maybe billions of dollars being traded by retail. About trading, about momentum, about stocks, about short interest, about gamma squeezes. These are not things that I know a lot about, and so I put in a small position to learn. And what I learned is that people can do fundamental research, come to a point of view that's diametrically opposed to organized capital, and they can be right. And I'm allowed to be on the right side of that. You know, it's not my job to go and defend a bunch of, highly compensated hedge fund managers against losses. And just the fact that for one time those folks lost, we can bellyache and cry on national television, to me is a joke.
Well, I mean, I don't think
there's a lot of kids. Hold on a second. There's a lot of kids and a lot of people on WallStreetBets who have made money to pay off their mortgage. I read about a post yesterday of a kid that was able to pay off his entire student loans and posted it. That's amazing progress.
I'm not suggesting, and I'm not trying to come off that way, that I'm suggesting what's happened on WallStreetBets or what this cohort of traders is doing is wrong.
It's not.
I don't think that there's much of a difference from, and I know it's been mentioned on this network already today, but the first thing I thought of in this situation was back to the Herbalife episode, where you had a fairly sizable group of well-known hedge fund managers decide to take the other side of Bill Ackman's trade. He was, of course, short. They all went long. They made a fundamental case in their own mind, and whatever worked for them to have the conviction that they did to take that trade. Part of it was undoubtedly trying to hurt the short, who was Bill Ackman at that time. Maybe some of them did it through going to an idea dinner or whatever other forum, through personal phone calls or emails. And there was a large group of people on one side of the trade. I don't think it's any different. I don't think it's any different.
You just said it's not different. You're right. Idea dinners, that concept has existed for decades on Wall Street, where people get together in closed rooms behind closed doors and usher around names of companies, and they coalesce and decide to cooperate together. The guys on WallStreetBets just do it in the public completely transparently. In my opinion, that takes a lot more courage, because you could actually be wrong. Somebody can actually say, hey, listen, what you said made completely no sense whatsoever. And so what is the difference? In my opinion, this is the modern day instantiation of that dynamic, just writ large and at scale.
The only thing I'm concerned about is that there are inevitably going to be people who get hurt. I'm not talking about hedge fund managers. I'm not talking about them. I'm talking about the people who follow people into the trade, who think that this stock is going to continue to go up, because that's what they've been conditioned to think in the pandemic.
What should we do?
Because all stocks go up, apparently.
What should we do? Not allow folks. Here's what will happen if you follow your logic, then you'll say, you know what? Retail doesn't know what they're doing. I think you're wrong. Then the thing will be, retail shouldn't be allowed to participate in the stock market. I think you're wrong. And then you know what will happen, Scott? The inequality gap will grow and grow and grow. Because then what are they supposed to do then? Buy an ETF, a passive fund? They can't buy into hedge funds because the rules don't allow them to. So now systematically what you've done is you entrench poverty.
No, I mean, that's taking it too far. This is just accentuating those thoughts that Wall Street's a casino and nothing more. That's what this is perpetuating.
I don't think so. I think this is an example of, if you are going to so massively oversell a company to the extent that you're selling 40 more shares of that company that don't exist, and all of a sudden other folks are like, hey, wait a minute, this is going to get squeezed, and they buy it, that's just a smart trade. Retail saw it, Wall Street missed it, and they paid the price. So maybe, to your point, Scott, what regulators should do is say, hey, wait a minute, how can we allow companies to be 140% short? That doesn't make any sense. Maybe that's what should happen. They trade day over day, massively levered, small swings. So basically what you're saying is, hey, if retail runs a momentum play to squeeze a short, that's wrong. But hey, if Renaissance Technologies and somebody else does it, that's okay. That's what you're saying. You may not know that that's what you're saying, but that's what you're saying. And to me, that feels very unfair.
No. What I'm saying is someone's going to get screwed, okay? Someone's going to get screwed. And it's going to be it's going to be a retail investor who gets screwed because they think that this is the way the game works. that this is the new Wall Street. They're new to this game. Maybe they haven't been in the game that long. Not everybody, not trying to say that in any way, shape, or form, but somebody's going to get hurt. I'm not talking about the billionaire with the big house in the Hamptons. I'm talking about the person who thinks this is cool, fun, and an exciting way to spend their time.
I'm not taking away that there's an element of that, but you're really discounting how smart so many of these people are. Okay? And all I would encourage you to do is spend a little time in these forums, go into the Discord server, and you're not going to hear a bunch of bros just sloshing around. You're going to hear a bunch of really, really smart people talking about things in fundamental ways.
Basically, Chamath is saying that times have changed. In the past, fund managers usually group up to talk about certain stocks and they decide to pump up certain stocks or even short certain stocks together. And the fact is, the last one in line is always the retail investors. And to Chamath, this GameStop scenario is totally different. The retail investors in WallStreetBets have the courage to voice out their thoughts and have the courage to fight for it as a whole together. Personally, I can feel the fire within Chamath. He feels that every single one should have the same opportunities to have the same level game in the stock market. Because he feels that many big funds managers have unfair advantage through having sophisticated tools and some information that retail investors just like you and I are unable to access to. Thank you so much for watching. I hope you benefit from this video. If you can relate to any part of this video or if you agree with any part that Chamath say, feel free to share this video out with your friends and family and share with them that times have changed. Retail investors, just like you and I, should have the same playing field with big funds manager. I will see you in my next video.